You're watching EAC News. Thanks for joining us. Let's have a look at today's finance. The CSX index is currently 528.97 points, down 0.5 points or 0.08%. The daily exchange rate is at 4,045 compared to the US dollar. Now let's have a look what else is happening in finance around the world. The growth of China's government fiscal revenue slowed in March compared to the first 2 months of the year. Finance Ministry data showed it on Wednesday, further weighing on the flagging recovery already weakened by the COVID flare-ups. Last month's government fiscal revenue rose 3.42% year-on-year to 1.5834 trillion yuan, 91.03 billion US, slowing from 10.5% growth in January-February according to calculations based on official data. The country's fiscal spreading growth accelerated to 10.4% year-on-year to 2.56 trillion yen in March, after 7% growth in January-February. For the entire quarter, fiscal revenue rose 8.6% while spending was up 0.3%. For March, land sales revenues fell 22.84% from the year earlier to 403.6 billion yen, after not 29.5% plunge in the first 2 months, as a cash-strapped developers grew cautious about the land purchases. Oil prices traded higher but in a narrow range on Thursday, after being rocked early in the week by supply losses from Libya and worrying outlook for demand of International Monetary Fund cut in its global growth forecasts. Brent crude futures rose 55 cents or 0.5% to $107.35 a barrel at 11:15, recouping losses from the previous session. US West Texas Intermediate crude futures gained 41 cents or 0.4% to $102.60 a barrel, adding a 19-cent gain in its previous sessions. Analysts said marketing volatility is likely to pick up again soon, with the European Union still weighing on a ban of Russian oil for its invasion of Ukraine. Libya, a member of the OPEC, on Wednesday said that the country was losing more than 550,000 barrels per day of oil output due to blockades and major fields and export terminals. US stocks ended in a mixed territory on Wednesday as the tech-heavy Nasdaq was dragged down by the bleak Netflix earnings, with Netflix further losses, while bond yields dipped after a recent strong run. The Dow Jones Industry Average ended higher for the second straight day. The SP 500 was flat and the Nasdaq Composite fell sharply after Netflix reported it had lost subscribers for the first time in over a decade, casting gloom over the tech sector. The Dow ended up 0.71%, while the SP fell 0.6% and the Nasdaq dropped 1.22%. Investors got a fresh glimpse into the Federal Reserve's economy outlook on Wednesday, when the issue is beige book and economic conditions from the late February to April. The central bank reported the economy expanded at a moderate pace during that time, through businesses reported issues with high inflations and worker shortages. Mainland China and Hong Kong stocks fell on Thursday, hurt by worries about the Chinese economy, but an overnight tumble in longer-dated US Treasury yields lent support to other benchmark indexes. A 0.78% drop for Hong Kong and a 0.36% decline for blue chips in mainland China pulled MSCI's broadcast index Asia-Pacific shares outside Japan 0.22% lower. But shared benchmarks in Australia and Korea were up, while Japan's Nikkei rose 0.81%, Nasdaq futures gained 0.6% and SP 500 futures advanced 0.4%. The 10-year yield was 2.8455%, a whisker higher in Asia morning trade, but still bruised after falling overnight from a high of 2.981% in the early trade on Wednesday. Rob Connell, head of research of Asia Pacific Inc., said, "I think we'll still head towards the 3% for 10-year treasuries. I think it was a bit of a profit taking." Connell said the fall in bond yields may have provided some support for equities overnight, with the SP 500 broadly flat on the day, despite the uglier pitch of tech. This is the latest news and finance. Tune in tomorrow for more.